Ford Motor Company is set to lose $4.5 billion on electric vehicles this year as the American car industry braces for a, quote, invasion by cheap Chinese EVs. Ford's recent earnings showed its electric vehicle division lost $2.1 billion last year and is on track to double that this year. In fact, it's already lost $1.8 billion just 6 months in. Why are they losing so much? Because EV components are much more expensive than they'd expected. Well, it turns out consumers don't want nearly as many $60,000 EVs as they thought. Ford even had to cut the price on its flagship electric F-150, which it turns out you have to charge for 30 minutes every 100 miles with a small trailer, so 30 minutes every hour and a half, which makes for a really boring road trip or, say, workday. The rest of Ford, of course, did just fine, coming off pent-up lockdown demand. Remember when you couldn't get a car 2 years ago? In other words, the other 91% of Ford customers are now paying more so that Ford can lose money on EVs. Meanwhile, Reuters reports that dozens of cheap Chinese EV makers are poised for an invasion of Western markets, which the CEO of Chrysler owner Stellantis characterized as, quote, extremely brutal. He estimated the Chinese have a 25% cost advantage against Western car companies, which has already won them a 9% share of Europe's EV markets, on track to double in the next 2 years. It's a lot lower in the US since Trump's tariffs have held Chinese EVs at bay, but then Axios reports Chinese car makers are now hiring lobbyists in Washington, so that could well change in this democracy of ours. To get a scale of the threat, the average EV in the US currently costs around $55,000, but one major Chinese car maker, BYD, just announced a $10,000 EV, the Seagull, which kind of looks like a Ford Fiesta, and it undercuts the previous champ, the Great Wall's Aura Funky Cat. Both will definitely come up in price as they make them compliant for the US market, but there's no way domestics can compete at $55,000. And remember, Ford is already losing billions on EVs at those prices. If the prices come down, the losses will soar. For decades now, policymakers have fiddled while our manufacturing drains away, even as China builds up quality and cost advantages. Rather than proactively getting out of the way of American manufacturing, they keep throwing curveballs like EV mandates that are much easier for the Chinese or Elon Musk to handle than our lumbering legacy behemoths. On present trends, there is a very good chance that America's big three car makers could be dethroned, perhaps fade to irrelevancy, done in by these same trillion-dollar green subsidies handing industry after industry to China. Okay, we'll be watching. See you next time.